Last week here on this New Zealand dollar pair, we ended up capturing not only one, not only two, but three bearish price action days. And we did this by utilizing one very simple yet effective consolidation breakout pattern, which banked us in so far over 100 pips on this trade. I know that in my own personal trading, when I came to understand and accurately use these consolidation breakout patterns, it really helped to improve my trading. So in today's video, I'd like to share that knowledge with you to hopefully help improve your trading as well. So if you're new here to the trading channel, I'd like to say welcome. I'm Steven, your honest trading coach. And if you enjoy free educational content about Forex trading, then I need you to do two different things. One, go ahead and click that subscribe button down to the right-hand side below this video. Click the notification bell to make sure you're alerted when we come out with more free educational content like this. Also, click that like button for me while the intro and disclaimer roll. And I'll see you guys on the other side to share this consolidation breakout pattern. So guys, back here on the New Zealand dollar, here you can see that this is where we ended up placing a trade. This is where we took out our position. Why did we take that position out? Well, it's because of the pattern that we're discussing today, this consolidation breakout pattern. And if you look on the chart here, you can see this ascending period of consolidation. And this is the pattern we're going to be talking about today that I'm going to be teaching you guys how to utilize in the markets. So what is an ascending period of consolidation? What does this mean? Well, in reality, what's happening here is this market's pushing up. Oh, that's a little bit too thick, isn't it? This market's pushing up with a pretty strong trend and continues to break with these impulsive moves. And then what happens after this high? After this high here, instead of continuing to break up in very impulsive moves, what we end up getting is this market is now putting in this period of consolidation. We're still going up, still breaking into new highs, but instead of breaking into new highs with a big impulsive move like that, we're making this period of consolidation that's ascending up. And what this gives us a hint towards is that this period of consolidation could lead to this market reversing and breaking into new lows, starting to head lower. The reason we expect that is because this market has lost momentum. So what this pattern is a hint towards a loss in momentum. And if that was too fast for some of you, if you got a little confused during that, don't worry, we're going to talk a lot more about this pattern a little later on in the video, but I just wanted to give you guys a brief overview of what we were going to be taking a look at. So now let's go ahead and actually head up to a whiteboard and take a look at exactly what we're looking for. One, before this period of consolidation, what do we need to see before we can actually expect this period of consolidation to happen? And two, how are we going to enter the market if this period of consolidation occurs? So let's go ahead and go up to whiteboard and check that out. I'll see you guys right up there. Okay, so here we are on the whiteboard, and let's talk a little more about the ascending channel pattern. So what we're looking for is a market to be in trend, and we'll talk a little more about that in a second, and then this market to start creating a period of consolidation before a possible breakout down. Again, this area here is a signal towards a loss of momentum. We're going to abbreviate that with LM. We're looking at this area as an area where the market is losing momentum. The reason we believe that's because previously we were making these impulsive moves to the upside. And after this high here was created, call this our last high. After that last high was created, this market went into a period of consolidation that was still trending in the upward direction, but not nearly as strong, indicating that the market's losing position and putting us into a position ourselves to estimate, to expect some type of reversal out of the market after this period of consolidation. Now, there's a few rules that are extremely important when using this type of pattern. The first rule is that the market was previously in an uptrend. As you can see here, this market was previously in an uptrend. So previous uptrend, if you're doing this in the bearish direction, is extremely important, because we want this market to be losing momentum on the upside in order for this to be a possible reversal trade. So markets in a previous uptrend, another very important thing is that you understand trend lines. Once we're in this period of consolidation, you will have to draw this channel out in order to, one, make your trade based on an entry reason, and two, just to understand when the market's in a period of consolidation. So figuring out where to draw your trend lines is very important. Also, noticing that the market was in a previous trend, whether that be up or down, because you can trade this in the bullish and bearish direction, are both extremely important when trading this type of strategy. So now let's take a look at the ways you could enter the market. Now that we've discussed a little bit about that, this is a very simple trading concept. So hopefully you were able to understand everything just going through it once. But after we see this previous market in an uptrend, then the market begins to consolidate, creating highs, but these highs are not a large amount higher than the previous highs. Also, the market's consolidating in between, creating at least one trend line, meaning we have two different support levels we can draw this on. And once created, that support level, that supporting trend line, when broken, can be a reason to enter that trade, right? We can enter on the breakout. As soon as we break out, enter the trade there, stop loss above previous resistance, looking for a reversal. Another way we could do this is waiting on the market to pull back up into the trend line or previous level of structure looking left, and then enter the trade there on a less aggressive approach. Same thing, stop loss above resistance, and then looking for the reversal out of this market. Another way you could trade this is just by aggressively entering, possibly on a candlestick pattern, at the top of that move, at the top of the move of consolidation. So those are a few different ways we can enter the market based around this trading strategy, and that's the things we'd be looking for beforehand when looking at ascending or descending channels in the market. Let's do this one more time based around a downtrend, and then we'll move on to taking a look at this on live price action. So if we were in a downtrend, utilizing the ascending or descending channel, we would be looking for a market that was previously in a downtrend and then begins to consolidate down instead of making impulsive moves. Once we get that period of consolidation down, looking for a reversal out of this market. As you can see, we have impulsive move down, impulsive move down, impulsive move down, and then this market just begins to consolidate down here. Once this consolidation begins, we can wait to draw a possible trend line to create our channel, and then wait for possible entry reasons, either at the bottom here as a very aggressive approach, at the breakout as the secondary aggressive approach, or after a pullback into the channel as a more conservative approach on this type of trading philosophy. So that's a quick look at exactly how to utilize this in the markets. Let's go ahead and head to some live price action and take a look at this in the markets on a couple of different currency pairs. Here on the Aussie dollar, we actually have the opposite situation as the one we were looking at on the New Zealand dollar. What I mean by that is on the New Zealand dollar, we were looking at a market heading up, then creating a period of consolidation with an upward sloping channel and then breaking out to the downside. That was a situation where we were looking for a bearish breakout, looking for the trend to reverse from up to down. Here on the Aussie dollar, we're looking for the opposite of that. We have a market that's been in a downtrend, and since being in this downtrend, we've been creating impulsive moves. This was also a really impulsive move down, but now what we're looking for is this period of consolidation that you can see coming in here. We still get a lower low, so still in a downtrend here. We still get a lower low here, still in a downtrend, but the thing about this little section here is that we're creating this downtrend in a period of consolidation. We're creating this downward sloping bearish channel, and we're waiting for a breakout of that channel to give us a possible indication of a reversal out of this market. And as you can see here on the Aussie dollar, that's exactly what ended up happening. If we go ahead and scroll the chart sideways, you can see that this market had a pretty nice rally directly after this period of consolidation in this downward sloping channel. So there's an example of a downward sloping channel working in the opposite direction of the New Zealand dollar that we took a look at earlier. And now we'll head back over to the New Zealand dollar. We'll take a look at one last trade. And now that we've went over all the rules of this upward sloping channel breakout pattern, it should be really easy for you to spot here on the New Zealand dollar. If you take a look here with me, you can see that this market was putting in impulsive moves to the upside. Directly afterwards, we ended up in this period of consolidation that continued in that uptrend, but this was nowhere near as powerful of moves. These legs right here, these little moves in the market were nowhere near as powerful as these impulsive moves that were happening previously. They were consolidating moves, which gave us an opportunity to draw trend lines on this upward sloping channel, and ultimately gave us an opportunity to capture some very large gains out of the New Zealand dollar pair in the bearish direction. As you can see, this specific pattern pushed the market down over 120 pips. All right, guys, so there was some valuable information about ascending and descending channel breakout patterns. Hopefully that information will help you to improve your trading. And if you still find yourself struggling to find the path to profitable trading, then I hope that this video has given you a certain amount of hope and maybe even the skills necessary to achieve that goal. Also, it's important for you to know that at one point I was struggling in my trading career too. We all do that. It takes a certain kind of learning experience in order to become an expert in the trading industry. And for me, random bits of free Forex education online were never enough. I needed an organized and systematic approach to trading success. Similar to the way you learn how to ride a bike, you don't just jump on the bike without any training wheels in the very beginning and take off. If you do that, more than likely you're going to fall and probably injure yourself. And if you're trying to become a successful trader based on nothing but free information from YouTube and free online sources, that's very similar to trying to ride a bike for your first time without any training wheels. So if you feel that way about your trading, and I'm sure your trading has felt that way at some point because I know mine has as well, then we do offer a program called the EAP Training Program that's helped hundreds of other traders on their path to becoming profitable. This program offers a full training course that teaches the entry reasons, the rules that we use in our own trading plan, plus the more important aspects of a trading plan, including risk management, discipline, and trading psychology. So if you'd like to learn more about the EAP Training Program, then feel free to click the link in the description labeled EAP Training Program. And if you're not ready to invest in your education yet, that's okay too. Just make sure you're subscribed here to our channel to make sure that you're alerted every time we come out with free educational content each and every week. If you enjoyed today's content, make sure to go ahead and click that like button for me to help support the channel. I wish you the best of luck in all your future trades, and I'll talk to you in the next video.